Let's go ahead and make a quick revision of what we have learned till now. First, we learned about stochastic oscillator. Stochastic oscillator is a momentum oscillator that tends to calculate the speed of price change and plot it between 0 to 100. Setups that can be traded with stochastic oscillator are divergences, which include positive divergence and negative divergence, and bull setup and bear setup, which include bull setup and bear setup. If you have any problem remembering these setups, you can go back into the video and learn about positive and negative divergence as well as bull and bear setup. Next, we learned about RSI, relative strength index, and how it can be used in a wide range of ways. RSI is a momentum indicator that measures the speed and change of price moment. RSI can be used to find stocks in overbought and oversold zones, as well as RSI can be used to trade divergences, reversals, and swing failures. In divergence, RSI can be used to trade bullish divergence as well as bearish divergence. In reversal setups, there are positive reversals and negative reversals. And remember, positive reversals are a bull market phenomena, negative reversals are a bear market phenomena. In swing failures, RSI can be used to trade bullish failures that makes bottoms and bearish failures that makes on the top. So RSI can be used for trading various setups. Along with them, RSI can be used to identify bullish trending markets or a bull market or a bearish trending market or a bear market. In a bull market, RSI tends to trade between 70 and 50, whereas in bear market, RSI tends to trade between the level of 30 and 50. If you have any problem remembering these setups, go back into the video and look at them. Next, we learned about moving average, convergence, divergence. MACD histogram plots the distance between MACD line and its signal line. MACD histogram is a momentum indicator. Setups in MACD histograms are peak thorough divergence, peak divergence or bearish divergence, thorough divergence or bullish divergence. We learned for peak and thorough divergence setups, you need two distinctly identifiable peaks and two distinctly identifiable thorougghs or bottoms in histogram. Whereas in slant divergences, these divergences are made on a single peak but at reaction of prices. There are slant bullish divergence and slant bearish divergence which can be traded. Remember, MACD histogram is a derivative of a moving average. It's the fourth derivative. The histogram that is plotted on the chart is a fourth derivative, which means there are three different factors that are calculated between histogram and price. So MACD histogram many a times lags behind the price change. As a result, it is best to use MACD histogram to know the direction of a market and use some other indicator to make your entry and adjust your stop loss. So till now we learned three most importantly used and most widely used momentum indicators and what are the common setups that can be traded into these indicators. Next, we will go ahead and learn how these indicators can be clubbed together, used in multiple ways to increase our trading chances or increase our profitability.